Hey, how's it going, everyone? Just wanted to kind of bring you a quick video here. Just got done talking to Courtney, and we were discussing options again. And we continue to get a lot of questions on options, and it just seems to be kind of the hot thing going on right now. Retail traders really want to get in on options, kind of learn the way to trade them. And so I wanted to do a quick video for you today. So my name is Kevin Tennyson. I'm a Flex Financial Wealth Coach and mentor at Flex Financial Trading Group. And today I want to cover how we trade options here, some things that you should think about, and also some things that I think you should avoid to be successful in trading options. So, number one, I would say stop buying shorter dated call options. So, I understand why people do want to do this. They're cheap, they're less expensive, and they do have a big upside. So there is a way to actually make money doing this, but you have to be exactly right. Whether you're buying a call option or you're buying a put option, you really have to be correct in the direction that stock is going to move. And again, those types of options, if you're doing a shorter dated option, they have expiration dates. So if the stock doesn't do exactly what you think it's going to do by the time your expiration date hits, then you're going to lose a lot of money playing it that way, depending on how many option contracts you're buying. So this is kind of the biggest way to gamble in the market. So unlike when you're buying shares, if you hold the shares and that stock doesn't do exactly what you think, you still hold the shares, so you can make a decision whether you want to hold on, kind of just let things play out. And if you're doing your research and understanding the company, then over time, good companies are going to rise. So we can't really determine what's going to happen on the day-to-day basis, what's coming out in the news, kind of what's going on in the media, and what's going to drive stocks up and down. We don't know when institutional traders are going to take profit, things like that. So when owning shares, you have the ability to kind of hold on and kind of trade that company long term based on what the company overall is doing. So if you're in on good companies, you know that those stocks have a tendency to rise. So what I also would like to talk about when it comes to trading options is long-term equity anticipation securities, or LEAPs for short. So just like buying shares and holding them, if you buy LEAPs, which are options contracts that are longer dated, over a year before the expiration date, then you're actually buying time to be right on the direction of these stocks. So if you get into a stock or into a LEAPS contract instead of a shorter dated, the expiration date is going to be at least a year out. So just like owning shares, you are buying time for that stock to be right and go in the direction that you think. So again, you definitely want to do your research. You definitely want to trade stocks, in companies that you believe in. You understand the fundamentals, and you believe are going to rise over the long term. That way, if you do get into a LEAPS option contract and it starts to drop, the value of that stock starts to go down, then you're not stuck in that situation where the expiration date is coming up quickly and you're going to be out of money. So you're buying that additional time. They're a little bit more expensive, but you're buying that time to be right. And then on top of that, with LEAPS, you have in any options contracts, you have the option to buy in the money, at the money, or out of the money. So those are some things to think about. Also, how your different Greeks are going to play on that with time decay, with your deltas, things like that. So those are some things to also think about when trading options, and some things that we can definitely teach you if you want to check us out at flexfinancialtg.com. But again, just to kind of go over those options. Stop buying those shorter dated call options. Stop buying those shorter dated puts. Look at LEAPs. Look at things for the long term. This is going to give you some more security and allow you to overcome things if that stock turns around on you and kind of doesn't go exactly where you thought it was going to go immediately. You're buying that additional time, and that will allow you to be right. If you've done your research and those companies kind of play out the way you think they will. So again, if you'd like to learn more about LEAPs and learn more about options, definitely check us out at flexfinancialtg.com. We also show you how to take money from the market, doing cover calls to fund those LEAPs so that they're even less risk to you. So love to see you there. Check us out, and have a good one.